Okay, so I want to just cover yesterday and how you could have traded it, and I want to do it a little bit differently because most of the time I do a lot of talking, and I don't know how much makes sense or not. But so today I want to do it a little bit more as a work group where I'm going to ask questions, and I got Vic with an open mic. Anyone else feels free to jump in as well. But so I'm going to ask questions, and then hopefully we'll get answers from Vic, and and then we'll discuss it and just walk through the day. So let's start tomorrow morning. So I'm going to start your pre-market. So this is our standard chart. So we have ES at the top, 2 minute, 1 minute, and I've added 10 minutes as well because I think we forget to look at the 10-minute chart. And that's really the thing that helps us to see trend. So we want to make sure we look at that. So now it's on this chart that I share with everyone. Then at the bottom, we have VIX, 1 minute, sorry, 2 minutes, 1 minute. And these use Heiken Ashi candles, which to me is a cleaner way to look at it. It filters out noise. So, when it changes from green to red, there's a change. So, it tends to filter out noise. You can go and read more about it if you don't know what it is. And then basically on the right hand side, I have VIX again on the 1 minute, but this time just regular candles and just represented as line sticks. So this is just because sometimes, so I can actually cleanse out the noise, but it's also a little bit slower, so you don't see the immediate move. So when you look at the 1 minute candlesticks, you'll see the immediate move more quickly. So sometimes it can help as well. Okay, so starting off with the day, let's look at, and like I said in the previous training, we want to spend more time looking at the VIX than looking at ES because ES is a little bit more noisy and VIX is a little bit cleaner. So Vic, when you look at this, so I'm just going to start here early before the market open. We don't trade it, but it's important for us to start looking at it, and we want to see how it behaves. We want to see if VIX is spending more time below the 48, more time above it. Do they respect our rules? So if VIX goes up, does ES go down, and vice versa? Because I mean, looking at at the charts and looking at whether they respect our rules and follow it will tell us if we can continue to expect our rules to work. Like, remember when we had that big spike and VIX and ES was totally trading together and it was a huge run. So you could see there that our rules were not respected. So then you just have to throw them out the window and say, okay, right now, whatever reason, they don't respect our rules, so we're not going to use them. We're going to look, either you don't trade or you use something else, okay? And we can talk about that some other time. But so when we look at this in the morning, so the question is, you know, do our rules work? So right here we're trading VIX is trading at the 48. So what does that tell us, Vic? And I'll let you start. What does it tell you if VIX or ES trades around the 48?
Even if it's just trading at the direction, not so longish bias.
Plus there's chop, so we want to be super careful. Exactly. Okay. So now we get here and we see that VIX there's a blue triangle. So now we expect, based on that, we expect VIX to go down, and if we expect VIX to go down based on, and we're not predicting. So I'm going to use the word expect a lot here in today's training, but please don't see it as predicting, okay? Because we're not predicting anything. We're saying based on what I see and based on our rules, this is what I expect to happen. If it doesn't happen, then obviously I have to be careful. Okay, so if we see a blue triangle VIX is going down, and so now I'm, and so I got this right here, and I'm gonna put on I'm gonna draw. So I have this blue triangle there at this point. So what am I expecting ES to do after I see that? That's right. So I'm expecting to see a yellow triangle at some point. So now I'm getting yellow triangle, and I'm saying, okay, cool. I was expecting that, so that's cool. Now, obviously, we're not trading before the market opens, but I think it's very important to narrate what you see and what's happening, and then say, okay, what would I, what would I do if I was trading? Even if you don't trade today because it's a Friday and it's more risky, it's still important to narrate and say, okay, so I'm expecting this, I see it, so that's good. Okay, so now, obviously, if you were trading, you're not gonna get in until you see the danger zone forming because you have nothing to work with. Okay, so we want to wait for the danger zone to form, and we want to make sure the danger zone has a yellow outline for calls. Okay, so based on this, we're saying, okay, we get the yellow triangle, but nothing's going to happen here because I don't have the danger zone. And this thing forms when my 8 EMAs are stacked. So the bottom line is formed out by the 8 EMA on the 5 minutes. The top line is formed by the 8 EMA on the 2 minutes if you're on the 2-minute chart, or the 1 minute if you're on the 1-minute chart. Okay, so your EMAs need to be stacked. That means that your shorter time frame should be above the longer time frame. If it's not, then we're not going to play calls. And obviously with puts, it's the opposite. So as soon as I see them stacked, and I mean, there's way more than that, but at the fundamental level, that's what happens here. I see they get stacked, I draw them, I draw a yellow outline. So now, if you're going to get into calls, obviously you want to get in as close as possible to the danger zone. Okay, because usually we say, hey, if I'm in calls and I break into the danger zone, now I think about getting out. If I break below the bottom of the danger zone, I'm thinking about getting out. I mean, it all depends on how deep in the money I am, etc., etc. But the danger zone is there really to say, okay, if I break below it, I probably want to get out unless, I'm confident in the trend. So if I can get into it much closer to it, then I can give it a little bit more room to stay in the trade a little bit longer. Now, if I get in at the top of the candle, then obviously now I have my stop loss is much bigger. I could lose much more. So that wouldn't be a good thing. Now, when I look at this, I'm also seeing that I'm approaching the 48. I'm approaching the VWAP. So those are reasons not to get into this trade. So when you look at this trade, you want to consider all the good, the bad, and the ugly. Okay. So you're like, hey, I have a blue triangle. I'm expecting a yellow one. I'm getting it. I'm not doing anything until I get the danger zone, until I get the outline. I'm like, okay, now I could jump in here. But when you jump into any trade, the first question you want to ask, what's the first question you want to ask before you jump into any trade, Vic?
Is it a good setup?
Okay, but we already decided it's a good setup. Okay. What's the next question? Anyone else? What? So it's like, because we're like, okay, I have a yellow triangle, I have a blue triangle on VIX, I see the danger zone forming. So what's the next question we ask? Yeah, so the question is, what's my next targets? Okay. So my next targets are also many times the next obstacles. Okay, because remember, every time we approach a Mancini level, I say, okay, make sure you take profits before you get there, because these levels are very important, and a lot of the more experienced traders will take profits before they get there. Okay, sometimes you slice right through them, but so when you get in at this spot, your next target and therefore your next obstacle are the next levels. Okay, so your next target is going to be the VWAP. If it gets through that, it's going to be the 48 cloud. Okay, and then the next one is going to be the top band. Okay, so those are all your targets and you have to consider them. So if you get in here, you better know that this is going to be a super short scalp. You're going to get in here and you want to get out, take some profit at the VWAP, then 48, then when you touch the top line. And if you get a big candle, you always take profit. So when you look at it from that perspective, would you say that this would be a good trade or not?
I don't know.
Yeah, it's this is not, there's your risk and your reward doesn't, it's not a good risk to reward ratio, because your risk is that we could go down. Your reward is really your very first level. Okay. Now, obviously, I always say take profits at the first level, or you can do it at 10%, 15%, 20%, whatever you want, and then keep runners. But it's too early in the day to consider a trend. I mean, we expect most trends to form after 10 a.m. So at this point, you're not going to be talking about a trend. So if you trade before 10 a.m., it should be scalping only. Okay. And sometimes we get a trend that forms before the market opens or before 10 a.m., and that's okay. Those are exceptions, and we don't trade based on exceptions. We want to trade more things that's more probable, because trading is a probability game. Okay, so if you get in here, so these guys line up, you could get in here as close as possible to this, and then you could take profit around here, and you would have made money. Okay, now as long as you stay above the danger zone, you're good to go. So so ES is above it, VIX is below its danger zone, and it's got an outline, so that's good. So I mean, so as long as that happens, you could just keep your runners, and just keep moving your stop loss up. You don't want to be in any trade without stop, because as you've seen multiple times, it could turn very quickly and very abruptly, and you can go up from 100% to down 50% in just a couple of candles. So that's why you have to have your stop. So once this guy breaks into, so this is a nice run. We know it's a scalp. So when you have scalps, you're going to take your profit sooner. Like if it's a trend, different rules. There is no proven trend yet. So you want to take your profit sooner. Does that make sense? Okay, so you get here, it touches it. So at this point, you want to be out because you're in scalp mode. Okay, now if I look at it down here, so I break through into the danger zone. I'm in scalp mode, so I'm gonna be out of the trade. Down here at the bottom, we also see VIX turning up. Okay. So now what do we see? So we see, so we go here. This is going down. So we have a blue triangle. Now VIX doesn't have a yellow triangle just yet. You see this forming, but again, your next target is the VWAP. So again, this wouldn't be a good trade. I mean, you could scalp it, but you're probably going to overtrade. So I'm not recommending that. But so we're looking to see if rules are being followed. Okay, so we get this, we get it down, it moves down. we get a yellow triangle on VIX, so that's good. But then we also see VIX respecting this EMA cloud. So remember this EMA cloud is the 513. Ripster uses the 512. But so for us to become bullish on VIX, first we have to break through above this cloud. Okay, so this is the first defense. The last defense is the 48. We have to break through it and stay above it. So the fact that VIX is respecting this EMA cloud right here and going down tells me that VIX is still going down. If it cannot break through this cloud, it cannot break through the 48. Okay, so it's respecting it for now. So this means it's going to keep going down. So when it keeps going down, this tells me that I don't have a blue triangle yet, but at this point, I'm expecting probably if this goes down, I'm expecting a yellow triangle on the ES to show up, okay, because it's respecting that, okay. Now we get a yellow triangle at this point, and we can see further down movement here in VIX, and then at this point we see the danger zone forming with a yellow outline. So now at this point, I took some calls, and obviously you wanna stay small. But what's beautiful about this entry now is we're above the VWAP, we're above the danger zone, above the 48, and our next target. What's our next target, Vic? Anyone? What's the next target?
I can't see it. Are we talking about high?
So if I get into a trade right here, I'm above the VWAP. So what's my next target? What's my next obstacle if I got into a trade over here?
Is it going above the green cloud?
So the green cloud is just starting here. And that's a good thing. So if I'm above the danger zone, I'm above the green cloud, that's all good. But what's my next target if I get into a trade over here? Where do I take my first profits? So my first target would be the Mancini level. So remember the Mancini level. So we have the pivot level here as 45.18. So we draw it on the chart, the pivot level here in orange, and then we have support in green, and then red is my resistance. So my first target would be this level, and it went so fast through it that you probably would have missed it, and then the rule is then to take profits on a big candle, and again we don't have a trend, so holding on to runners is a little premature. But if you decide you want to do that's fine. Make sure you have stop losses. But so your first target is going to be the Mancini level. Next target is going to be the top band over there, 45.22. Okay, and as long as you stay above the danger zone, you could stay in the trade. But I would definitely recommend taking most of your profits right there, okay, when you get to the upper band. Okay, now,
So at that point, just leave runners for the.
well, I mean, because we don't have a proven trend yet, runners are a little dangerous. So if you take them, you want your runners to have a tighter stop loss. Look, if there's a trend, let's say you get in, you could take partial profit, let's say at 20%, whatever it is. You could take your runner and move the stop loss to minus 20% because you already sold 2 or 3 or whatever at 20% profit. So you can give it a lot of room, and then as it moves up, you can move that stop loss up. But when you don't have a trend yet, if you have a runner, in this case, if you want to keep a runner, I would immediately move the runner stop loss to break even. So you want to give it room, but you don't want to give it like more, extra room, because it's not on a trend day. You want to give runners extra room, because if you don't, they're going to stump hunt you and knock you out, and then you lose on that big move. So you don't have a trend day. If you keep a runner, make sure it's at least at break even, and then you can keep moving it up so that you can never lose money. If you have runners, it should be in a way that you could never lose money on them. So you shouldn't be afraid to keep runners, because you've taken most of your profits already, and your runners cannot lose money because you have a stop loss. Okay, and then you just say, let it ride, and let's see if we get lucky. Sometimes you do, sometimes you don't. Does that make sense?
Yeah, it does. Actually, using stop loss made a big difference. After something goes above, at that point, probably best to put stop loss.
100%. You should never have a green trade go red. So if you're in profit by 10%, maybe even 5%, depending on how nervous you are, you should move your stops up to break even. You should never let a green trade go red. That's really important, because there will always be another trade. Okay, so good question.
Hey, Frank, can you also talk about what you're buying at this moment in time? Are you buying at the money, in the money, out the money? What are you buying at this moment in time? Because you don't have a trend established.
Yeah, I mean, so I don't want to spend too much time on that, but so if you have an A plus setup and you have a trend, then I like to buy in the money. I only play SPX. I mean, but you can, if it's SPY, you can just divide it by 10. If it is so if it's in the money, you're gonna make money quicker, but you're gonna lose money quicker if you're wrong. Okay, but you never want to be too far out of the money, because then you're not going to make money, and it's probably going to go to zero by the end of the day. Okay, so I mean, if you buy, let's keep it simple. If you buy 4,000, SPX 4,000 calls, and we close at 4,000 or 4,001. It's pretty much worth $0 at the end of the day. So you have to understand that. So even when you're right, it's going to zero. So for the 4,000 contracts to be worth anything, it has to be above it. So if it closes at 4,010, then it will be worth $10. Okay. But if you're just right, that's not good enough. So if you spend $10 on it, you better be right by more than 10 points. Okay, if you spend $1 on something, you better be right at the end of the day by more than $1. Otherwise, you're wasting your money. So that's what you have to understand. And so if you buy too much out of the money, the likelihood of it going to zero is absolutely big. Okay, so you can only scalp if you're too far out of the money. But yeah, if there's no trend, then on SPX, I would say $10 out of the money is reasonable. No more than $20 out of the money. Otherwise, you're definitely just wasting your time and your money. So okay, so we get in here now. So we're in here. We see this yellow triangle. Now we get confirmation on VIX. This is the guy we want to look at more. And we can see a blue triangle. So we're like, okay, I feel better about it. So now, like I said, you wanted to take profit at the Mancini level, but it was so fast, so you probably missed it. And then you get a confirmation on VIX, and you're like, okay, based on this extra confirmation, I could probably stay a little bit longer because I have stop losses. And then you could ride it to the top of the band. Okay. And I mean, and each candle is 2 minutes, so it's not like you don't have time to think about these things. Okay. Now let me just move this up a little bit. Now what happens is I get to the top, I hit it, the green band becomes blue. Okay, we're falling below this upper band. So now it's like I'm out of calls. Okay, I have multiple reasons. You know, there's no trend day. Well, yeah, it's too early for a trend. You just cannot know if it's going to be a trend. There's no proven trend. So I'm out. Boom. Okay, so you take your profits. You're out. Okay, very important. So do you guys understand why you have to be out of the trade at this point up here? You know, regardless of what happens, regardless if it could still go up after a short pullback. Vic, you want to tell us why you have to be out at this point?
I mean, well, it's the VIX is turning, so I'm not getting any confirmation it's continuing to go down, which is going to push the market up. And you're at the top band, which is a good place to take profits. So I'm typically out of that trade at this point.
Okay, good. So now it goes down. Let me just clear all of the drawings. Okay. Yeah, we're recording it, so I'll make it available for you to watch. Let me just see. So I want to now turn that off. How do I turn drawing off? I don't know. I should use these tools. Okay, there we go. I should use the drawing tools more. I think it helps. Okay, so now we get a blue triangle on ES. Okay. And so this blue triangle, we're approaching the 48 in the VWAP. So definitely not a good time to get in. Okay. Can you guys see that? So blue triangle. And I mean, so it locks in when this candle closes, and this candle is still above the VWAP and the 48 cloud over there. Okay. Now, and I don't have a proper danger zone. It starts forming right over there, which is also when I get my yellow triangle on the VIX. Okay, so it goes down, but we're still here around the 48, so it's still dangerous. So if you get in, obviously you would have had to stop out or lose money, because this was, violent turn. And when I look at this, remember, so what's our rule saying? If VIX is below the 48, okay, what does it say about how do we handle the ES?
No trade.
Well, I mean, so if VIX is below 48, we don't want to be trading ES below the 48. So we want to be careful if they're both on the same side, because right here when we get the signal, we're above it, but then the next candle we're below it, but VIX is still below it. Okay, so if VIX is below the 48 and now we're below it, that's a dangerous setup. Okay. So we get a blue triangle, we see the danger zone forming, but we also know that this is not a smart place to get involved, because now they're both on the same side of the 48. Plus we don't have a pullback retest confirmation. So can you guys see why this was not a good trade today to take?
Yeah, that's clear.
Okay, so this is not a good trade to take. Okay, so now it gets here, it bounces up, and you say, thank goodness, I can read the tea leaves. And what happens is at the same time as what this is bouncing, we see VIX changing direction again. So we're like, okay, so it looks like VIX broke above this cloud. And so it looks like VIX is gonna keep going down. I mean, that's what it looks like. Okay. So, but we don't have a confirmation yet to go for calls. Okay, so we get there, and guess what happens? Here at this point, we get a yellow triangle. Okay, so we get it right here. And then we're like, okay, we have, oh, the market's open. I mean, I'm going to keep going. Feel free to drop off. I have this recorded, so you can look at it later if you want to go trade. But so you get this yellow triangle, and you know, you see the danger zone forming, and so you might say, okay, you know, this might be a good place to get in. But what you have to remember is VIX is right here deciding on the 48. So we don't have, like, you couldn't call this a reject because this is too quick. We at least want to see it come back and retest it before we can really call it a rejection. So this is a dangerous trade to get into because we still do not have a decision by VIX on the 48. Can you guys see that?
Yeah.
Okay. So now we wait and we see, okay, and then we see, so VIX, we have a yellow candle. So by the time we get this yellow candle, also, now we have a yellow candle on both VIX and ES. So this yellow candle is clearly not a good place to get in because we have yellow, and that's against our trading rules. Okay. So now we wait and we get a blue triangle on ES. So now we have blue and yellow, and that matches our trading rules. And we see at this point, we see that VIX is also above the 48. Okay, so now they're on the opposite sides. Okay. But you know, it just happened, so it could still change. You know, we don't want to jump in too quickly because that's many times how we get burned. So they're on opposite sides. We have opposite color triangles, and we have the danger zone, and the colors are right. We have the danger zone down here. The colors are right, but it's still a little early. Okay. So now, and you guys can remember yesterday when we got here, I said I'm taking put lotos. So what did I see? I saw this guy retest the 48 in the VWAP and rejecting it at this point. Okay, so can you guys see how this was very volatile? We had a go-ahead for puts based on the triangles, based on the danger zone clouds. And then we got the retest. And this is ideal times to get in when you have everything telling you it's time for puts, and you get a retest where it comes back up one last chance or one last time. And you won't know it's the last time, obviously. But if I clear all of the drawings and I zoom in, you can see. So you can see how it came in and it retested the VWAP and the 48 and rejected. And that's where I got into puts. Okay. Can you guys see that?
Yep.
Okay, and I typed this in the Discord, so you know, so you guys know that I typed that when this happened exactly at that time, and then I took profit somewhere around here, and I kept runners because when I looked at the internals at that same time, boom, look at the internals. So when I looked at the ADD, you could just see that there was way more downside coming up. Okay, you can see if you keep going with the internals, this is the first time where you could really see it changing. So this is where, you know, you could see it on the 10-minute. We'll get there, but this is where I said, you know, and Chris raised it as well, is that, you know, we're turning, and so you want to look at all these things for confluence. But let's clear that out. So that was the entry. That was a good time to get in. Okay, I need to just go back here. So now we're in there. We rejected it. I took some profits. I forgot exactly when, but I said, okay, just holding runners now, and then because I see more downside, and then you can see it retest the danger zone. But if you keep watching, so you keep watching it, you can see that VIX is still strong, it's still moving. But more importantly, guys, take a look at, so when we're here, so the question is, do we get out or do we stay in? Okay. So what I want you to do is look at the 10-minute, okay? And this is what you have to remember. This is why we look at the 10-minute chart, because you can see when you have a, and let me just clear that so I can, so look at the low. So there's the low, there's the low. Okay, so we have lower low, lower low. This is an inside candle, okay? But there's the high. So when you get lower highs and lower lows, you're in a trend, okay? On the 10-minute. And then here we get higher high and lower low. So here we go sideways, and then we get a higher low and a higher high. So we start the trend back up. Can you guys see that? So you look at your 10-minute candles and you look at your lows and your highs. And as long as you have lower highs in the next candle and lower lows, you know, you could play down. When you have an inside candle, it's, you know, it's not over, but it's just like a little hesitation, and then it keeps going. When you have a candle that is engulfing like this, then, you know, it is usually where you go sideways, and then now you get a higher low and a higher high. So this is where you start your uptrend. And just, so if you look at this, just remove, go there. Okay, so when you look at this, and you look at exactly here, we're at the sideways candle. It was over here where you could say, okay, now I have a sideways candle. Look at all the time you have to lock in your profits. Okay, then it starts the upward candle, and look how much time you have to say, okay, I clearly could see. Oops, no, there we go. I clearly could see here is the start of my trend up. Okay, so I get a yellow triangle on ES, a blue triangle there. I have my danger zone forming. I have a yellow diamond. Now, this is a lower probability trade because we're below the 48, okay? But what I like about it is that we're above the Mancini level, okay? So these Mancini levels are really very important as confidence. So we're above it. So our next target is the 48 and the VWAP. So you get in here close to the danger zone as possible, and you take your profits up there, and then you hold runners. Okay, and then obviously if you hold your runners, you know, you could lock in some more at the next Mancini level, and this rejection here tells you down. But you know, at this point it becomes chop, and you can keep using this logic to go through the day, but I mean, at this point it became so dangerous because you could see these moves suddenly were like up and down. So, you know, it's like to make money when it's this choppy is very hard, because you could be up 100% and then down 50% in one candle. So it's important to know when not to trade, when the moves are this big and this choppy. I mean, chop is fine. That's how we make money. But when you have candles that move this much in a single candle, then at that point it's just not worth it. You know, so again, spend more time on the VIX so you can see some clear indications. So yours, again, a blue one, you know, you're at the 48, not worth it. Okay. Here's the yellow one at the 48. There's no, so nothing happens. Yeah, and then if it's sideways, that's a good point too. Is like if the 48 is sideways, that's chop. So don't be shy not to trade. I mean, it's like save your money for the days where it's a clear trend, and that's gonna do you better than trying to trade this chop. But I wanted to just go through the logic that you could use if you want to trade, because I mean it's the same logic whether there's chop or not, just knowing when there's confluence, when not to trade, when to get into a trade, what to wait for. So I hope that helped a little bit to understand more of the logic behind the indicator. Any other questions before I let you go?
Yeah. That was great, Frank.
Good. Well, guys, thanks so much. I'm going to disconnect. Okay. Let it make sense. Good. Okay, guys.